welcome to another Market Matters weekly update. Today I'm joined by John O'Higgins to chat mid-cap growth stocks incorporating the buy now, pay later space. Jono, Market Matters viewers will have heard from Jono or know Jono from videos recently. We did a webinar last year, Jono, around the space. It was a pretty popular webinar, so thanks very much. Welcome back, and I'm really interested to get your thoughts.
Awesome. Well, thanks for having me.
I'll start from setting the scene. I just want this to be a short, sharp, succinct overview of buy now, pay later, just where the sector is at now. So if you think about the backdrop we're operating in at the moment, you've obviously got Zip trading above 14, is now sub 8. You have to pay up to 160 or thereabouts to trade at below $100 this week.
Yes.
We've had a bit of corporate activity over in the US. How's the local market stacking up relative to what's happening overseas? So the Australian buy now experience versus what's happening over in the US?
Yeah, look, I mean, we're still leading the space over here in Australia. You know, we've got significant penetration and we're still seeing significant growth.
So, I'll touch on that. So the penetration here, so what does the market look like here? So buy now, pay later accounts for how much?
Yeah, so buy now, pay later is about 35-40% of the Australian population's got an active account in buy now, pay later in terms of Australia. So if you compare that to the US, which has only just started in the last 2 to 3 years, the US is at less than 7%, and they're not very frequent users. So, you know, you can go through most malls in Australia and you can go onto all of the online websites with the major retailers and you typically see Zip, Afterpay and maybe some of the others there. So we've got a high level of penetration, and it's a market that's still growing sort of 60-70% per annum. It's taking share off the credit cards and the like. Here in Australia. Whereas overseas in the US, you can't access buy now, pay later offline, predominantly an online form of credit currently, and it's a market which has only really started to grow in the last couple of years. So the way we think about it is the US is probably 3 years behind us, and we saw an extreme growth curve, and they're seeing a growth curve that's pretty similar, if not quicker than what we saw in Australia.
So basically what you're saying is if we've got 40% penetration here in Australia, so you've got 25 million people, we've got 7% over in the US. If we get anywhere near the numbers on the population in the US of 350 million or thereabouts, they're huge numbers, and that's why there's a big push to the US.
Look, definitely, and globally it's the same, and there's no reason it shouldn't be even better in the US. You know, like if we look at the US, online sales in the US, which is the predominant channel for picking up customers in the early stage for buy now, pay later, online retail is like north of 20%. You know, even here during the pandemic in Australia, we're sort of talking 14-15%. And so we've really adopted a solution when we've got lower penetration of growth than what they've got in the US. They've obviously got some e-commerce players that are massive, and e-commerce really is what grows the buy now, pay later share at the early stages before you start to enter into offline retail. You know, what the interesting thing is, you're playing with a significant market. So you're playing with, probably 300 million people that are in your target market. You get to 40% of them, you're talking about 150 million Americans. You know, they're all transacting $200 to $300 a quarter at some point in the next 4 to 5 years. There's a significant amount of margin versus probably the 10 million customers in Australia we're talking towards.
So the margin's an interesting thing. So you've obviously we've got the US is where everyone is now targeting. So Zip has bought Quad, Afterpay's raised $1 billion to go and expand in the US or push into the US. You've got Klarna who's raised $1 billion to push into the US. Is that so? They're obviously going for the land grab over there, and you've stated the reasons why. Does that, it's getting more competitive? Does that have an impact on margins?
Yeah, look, it definitely does at some point. Like, I think the way to think about competition in the market is there's various stages to competition. What we're seeing over there is a real blue ocean. People aren't fighting at the moment, and more competition is equaling more knowledge and more adoption at an early stage. And we saw it in Australia. One of the best things for Zip that happened was that Afterpay was so successful, you can have more than one option at a checkout. You get more adoption, you can use it in more locations, and all of a sudden it creates its own ecosystem. So we're at that stage in America where all these companies raising capital and educating merchants and getting online, it's all helping each other at the moment. We haven't seen margin compression as yet. It's still very early days. We're still in the first couple of years. But what I would say is that we expect that over the next couple of years, we will start to see more competition. That'll manifest itself over the margins. Probably the one key thing I'll say about the US, however, is that they do have different revenue models to Australia. So the buy now, pay later companies here in Australia, they predominantly make all their fees out of a merchant margin. So, Afterpay's on average charging their merchants 4%, and then they're making a 2% margin after costs. Zip's got a bit of a different revenue model, but it's broadly sort of homogenous in how you think about that. In the US, they're charging interchange fees. Interchange in the US can be 1.5%. Affiliate online, they can take up to 15% of a basket. There's all sorts of ways that they're actually augmenting the growth. So we've actually seen the overseas players actually increasing margins at an early stage. My view is that we've still got another probably 24 months at least. It doesn't seem that long away, but it's a long time in technology before we start to see them fighting at the checkout. They're not fighting at the moment. It's a big ocean. It's a blue market. We're talking about only having 6% of Americans having used it in the last 12 months. They might have used it once or twice. If you talk about having 40% of the market there having an account in 2 or 3 years' time, which is the adoption curve it looks like, that's 150 million Americans. You're talking about a significant part of their online retail sales. They'll have to make money at some point with a different revenue model. We're starting to see that happening with Afterpay launching digital money. We're seeing it with Zip, with some of the other products. But at the moment, we're just not seeing it, and we don't think we will see it this year.
Okay, so Zip, you made mention of, bought QuadPay, pushing into the US. I think it's trading just around $8 at the moment. You've got a really bullish 12-month price target above $15 a share.
Yep.
You're the most bullish in the market. You're double what consensus is. I've got to say, there's huge splits around what the market is expecting in these sort of buy now, pay later companies. So, UBS went to a sell on Zip this week.
Yes.
But to put that into context, they've got Afterpay as a sell with a 36 price target versus 115 current price. So there's a lot of diversity out there in views. You're one of the top rated analysts on Zip in the market. So why Zip, and why is it going to go to that $15 in the next 12 months?
Yeah, look, I mean, it's been a good place to be over the last couple of years, having a buy on the stock, and has been a divergent view to others. Look, I think there's two schools of thought with how people are thinking towards the sector. People are either looking towards the growth opportunity, or people are looking at the valuations. And there's no doubt these are highly valued businesses.
Should you just forget valuation?
No, you shouldn't forget valuation, but I think you should take a rational view into how you think about it over the long term. So part of the reason we like Zip is because we can see how some of the peers are valued, and peers aren't the be all and end all, but we can see how some of these peers are valued, like Affirm, like Afterpay, like what Klarna's going to IPO in the next 6 months.
So just to give some context there, Affirm was a big IPO over in the US, buy now, pay later, that is trading on a significantly bigger multiple than Zip is.
Yeah, so Zip would be worth north of $20 if it traded to Affirm's multiple. Now, Affirm's a great business. It's run by an ex-PayPal founder. It recently IPO'd, doubled at IPO, and then continued to rise after that. But they've served 6 million customers in the US to date. Zip serves 6 million customers, albeit half of them are in Australia. But the reality is they've got 3 million US customers, and 2 years ago that business didn't exist. So if that business is worth 25 billion US and the whole of the Zip business is worth the 4 or 5 it is currently, we see a really large valuation arbitrage in terms of the peers there. And the reality is that Zip's the fastest growing US buy now, pay later with respect to its size. And so that's what we like. We like growth. We think growth dominates over the long term, and we see no reason why their growth can't continue, if not accelerate over the next 12 months. So, in the short term, the reality is the yield curve is hitting all the growth stocks in the market. It's quite obvious that, 10 years of accelerated materially. We need to see that settle down until we see, the stocks recover. But this is a seasonally weak period for the sector. We've got a US stimulus bill that's just been passed, which is $1,400 US checks. One of the best bets in the market is people driving retail spend in the US as they spend that money in the next couple of months. That goes out in March, April. So you should expect Q3 update for Zip to be very strong, and you should expect Q4 to be even stronger. They're picking up some large merchants. Expect them to accelerate there. Expect the whole sector to step up in Q4. And we expect Zip to outperform on the back of that, on the back of their growth, and also the potential for a re-rating.
All right, Jono, thanks very much for the update today. Zip, Jono's got it on a buy. I agree with him around this $8 level. Thanks for joining us.